I'm looking at the most recent projection that the Fed had for median long-term growth. As of your June 13th report, I see it's 1.8%. Is that correct for the current long-term growth median projection?
Yes, it is.
Okay. Are you aware of what the projection was a year ago before the tax bill was passed?
I'm going to say 1.8%.
It was 1.8%. I mean, the reality is, despite all the hype around here, it's not really going to have an impact on our long-term growth. Surprisingly, a lot of us did think there was going to be a sugar high, right? I mean, when you dump $2 trillion into the economy, you would think there'd be some sugar high, and maybe there will be some sugar high. But I was interested in an analysis that came out of the San Francisco Fed. I don't know if you saw it. Two economists there actually said that the 2017 tax law is likely to give maybe not even a sugar high. Have you had a chance to review that analysis?
I have, and I would just say that there is a wide range of estimates of the effects of the recent fiscal changes, and they're talking about the possibility. I think their point was late in the cycle, when you're near full employment, the effects might be less. They might or they might not be. I think there's a lot of uncertainty. One of the great things about the Fed is we get a range of views, which is a healthy thing.
But it does stand to reason, right, that you'd have a smaller impact late in a cycle. I mean, that is why most fiscal policy in this country over years have said that we want to provide stimulus during the really tough times when a lot of people are out of work. But you don't necessarily want to provide stimulus sugar high when the economy is clicking on all cylinders. And I think that's the point these economists made, is we're actually in the 9th year of growth. So when you're talking about those some increase in real wages, not nearly what we want, I mean, that's over the 9-year period. Is that right?
So, I'm sorry, your question is?
When you talk about some small uptick, excuse me, in real wages, that's over the period of recovery, right?
I was really talking about nominal wages, and what I was talking about was, if you look at 2012, 13, 14, yeah, all of our main wage things sort of were around 2%, measures were around 2%. Now they're close to 3%. Yeah. So it wasn't an overnight thing, overnight sensation. It was a gradual increase, but you've seen a meaningful increase.
Right. And isn't it a fact that real wage increases were higher during the last term of the Obama administration than during the Trump administration?
I'd really have to go back and look at that.
I think I have the advantage, Mr. Chairman, of having your detailed Fed analysis here and the Bureau of Labor Statistics. And what it shows is that, in fact, real wage increases were higher during the last term of the Obama administration. The point here really is to not play make-believe, as we some hear around here, that this tax bill somehow miraculously helped a lot of people out. The reality is, as we heard, real wages are pretty flat. I understood your testimony about oil price increases. We don't know how long they'll be with us. But we also know that real wage increases were higher during the 4 years of the Obama administration than so far in the Trump administration, with the tax cut and everything else. So I hope that my colleagues will bring more of a discussion-based, reality-based discussion to this. The one thing we do know that tax bill did, the one thing we did know, is it's going to add about $2 trillion to our national debt, a debt that will have to be paid off by everybody in this room and their kids and grandkids. And at the same time, the Fed projection shows no change in the long-term growth projections. So we just blew $2 trillion. A lot of it's already going to stock buybacks. And I just hope we will sort of end the happy talk about what this tax cut did.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.